Hi there. So we're at the Ripple Wyckoff analysis session again, and looking at the Ripple chart after these two long green candle bars with quite a bit of selling force after it touches the ceiling of the yellow upward channel at around $3.4–3.5. That's that comes the question whether it has already hit the top of the upper of the distribution. Looking at the volume themselves, it seems pretty healthy despite the fact that this week's candle includes a bit of selling at the top. One thing, however, if we compare what happened in November last year, where we saw the price went all the way up to the buying climax, the difference here is the volume is significantly lower this point in time. That's the thing that worries me, because there seems to be telling like there is very limited supply and there are quite a bit of people FOMOing in, and that's not a healthy sign, because if it's really retail FOMOing in to like scoop up the last bit of supply, it really means the distribution is likely nearing an end. So that's the big picture and my worry. Hopefully it is not going to happen that way. And if we go and look at the daily chart, so last week we put in this buying climax tag over here. There was quite a bit of selling force at that moment, and luckily there has been continuous demand over the last few days and pushing the price up even further. However, today, once again, when it got close to this ceiling of the upward channel, that's where we have this significant selling force, much like what we have seen Friday last week. So here I'm updating the tech, moving it across to this point. So if this is really the buying climax, is obviously much higher than, I don't want to move the box, I just want to make the tag clearer to you, much higher than what we have seen here or even somewhere early on. So that's the thing. After buying climax, it's natural to have some retracement, the automatic reaction, similar here. So it's not a surprise if it comes down, if the price comes down to this yellow line, yellow horizontal line at around $2.75 to find support in order to go up. So it's not a must that it goes to that low, because in the upward channel, the channel over here, there's also a support line that's a little bit invisible, but we can definitely draw it over there. So it does not have to be always at like cutting the box in half. From what the activities has shown over here, is probably at this point. So the immediate support, if it happens in the next, like either today or next few days, would be around $3.20 before it comes down to test the $2.80 mark. So it can find support along this line and then go further up, or it goes below that line and finds support over here. So those are the scenarios and the price points. Hopefully this is not over yet, and the most positive scenario would be after this buying climax, there's an upthrust and then an upthrust of the distribution. That's where it gets to somewhere at the $4 to $5 range. That's the best case scenario if you are in the bulls team. If you're in the bears team, obviously the best scenario would be after the buying climax. There may be a second test, a mini one, and then eventually it dies down, much like what happened in February. So depending on which team you're in, sorry, February I'm in here, I forgot to change my invoice. So it can happen that way as well. So it really depends on how the market sentiments would be in the next few days. So trade safe.